Welcome to the channel. Here, we provide clear, actionable insights into the complex world of tax and accounting to help your business thrive.
You know, federal taxes seem to get all the attention, right? But the real action, the real chaos, that's all happening at the state level. And right now, there's this quiet revolution going on as states are just scrambling to rewrite their tax codes for our digital world. This December has been a real flashpoint. We're talking new rules, huge court cases, and massive reactions to federal law. So let's dive into the super fast-moving world of state taxes and figure out what it all means.
This right here. This is the billion-dollar question that's literally keeping state treasurers up at night. I mean, think about it. You've got a company selling a digital service from a server in, say, California to a customer in Florida, and it's all running on a platform hosted in Virginia. So where did the sale actually happen? Who gets to collect the tax? The thing is, our tax laws were written for a totally different era, brick-and-mortar stores, and they are seriously struggling to keep up.
And you know what? States aren't just sitting around waiting for some perfect answer to fall out of the sky. Nope. They're charging ahead, and it's creating this incredibly complex web of new rules and legal fights. In this explainer, we're going to look at the three main fronts in this tax war. First, how one single federal law is causing this massive domino effect across the country. Second, the really aggressive push to tax everything and anything digital. And finally, the super high-stakes court cases that are drawing the new lines in the sand.
All right, first up, let's talk about what happens when Washington, D.C. makes a big move. A single federal bill can kick off this huge chain reaction, forcing every single state to make some really tough choices about its own tax code, and they have to do it fast.
So this whole thing kicked off back on July 4th when Congress passed the One Big Beautiful Bill Act, or OBBBA for short. It was a massive overhaul of federal business tax rules. Well, by the time fall rolled around, states were in a full-blown scramble trying to figure out how to respond. The result? A complete patchwork of different regulations, which, as you can imagine, is a total nightmare for any business that's trying to operate in more than one state.
Okay, so the key word you need to know here is decoupling. To make things simple, most states just automatically follow federal tax rules. But what happens when a new federal law comes along that would blow a giant hole in a state's budget? That's when they decouple. It's basically a state putting its hand up and saying, yeah, thanks, but no thanks, DC. We're not playing by that new rule. It's how a state protects its own bottom line.
And wow, this is where you can really see how messy it all gets. You have one federal law, OBBBA, and look at this. 3 states, 3 totally different reactions. Illinois decided to decouple from bonus depreciation, which lets businesses take a big tax write-off on new equipment right away. Pennsylvania, on the other hand, focused on research expenses and business interest. And Rhode Island, they were so swamped they had to issue emergency rules just to keep up. Now just imagine for a second you're a business operating in all 3 of those states. It's an absolute compliance nightmare.
Okay, let's switch gears to our second big theme, the digital frontier. So while states are busy reacting to the feds, they're also getting proactive, trying to find ways to tax this new digital economy. The problem? They're trying to do it with a rule book from the 20th century. It's kind of like trying to play a video game with a rotary phone. And the results? Yeah, they're predictably messy.
So what are we talking about here? Well, these are the main battlegrounds. States are going after a whole range of services. Out in California, the big fight is over streaming services. They're arguing that Netflix should pay the same kinds of fees as old-school cable companies. In Illinois, it's all about e-commerce. And Maryland is really leading the charge, targeting both digital ads and IT services. And to see just how real this is, look at this number. Maryland rolled out a brand new 3% sales tax on certain IT and data services. Now, 3% might not sound like a lot, but this isn't just a simple tax hike. It's Maryland basically inventing a whole new tax category, one that's designed specifically to pull in money from the digital economy.
So how are they getting away with this? Well, it all comes down to quotes like this one from a California court. They ruled that video services are taxable regardless of the technology used to deliver them. So what does that really mean? It means they don't care if you're watching on an old cable box or your shiny new phone. To the state, a video service is a video service, period. And that's the exact logic they're trying to apply to, well, just about everything else.
Over in Illinois, their whole strategy is basically to cast the widest net they possibly can. They've come up with this term, marketplace facilitator. Think of places like Etsy or eBay, and they've defined it so broadly that it just scoops up tons of online businesses and makes them all responsible for collecting sales tax. It's a pretty clear signal. States are determined to leave no digital stone unturned.
Okay, so all of this, naturally leads us to our third big area, the courtroom. Because once these laws are on the books, someone has to figure out what they actually mean. And let me tell you, the tiniest, most boring-sounding details in a contract can suddenly have multi-million-dollar consequences.
Check this out. This case from the North Carolina Supreme Court is a perfect example of what I'm talking about. At first, a company was taking deposits for prepaid wireless. The money could only be used for phone service. The court said, yep, that's a taxable sale. Simple enough. But then, the company made one tiny tweak to its terms and conditions. They said the money could now be used for services or products. And just like that, poof, the court said it was no longer taxable. It had become a non-taxable stored value card. A tiny change in wording with a huge financial impact.
And it's not always the state that wins these battles either. Take this case in Washington. The state's Department of Revenue tried to get really narrow with how they interpreted a tax break for a manufacturer. But the court stepped in and said, nope, you can't do that. They actually sided with the taxpayer, which is a great reminder that the tax agency doesn't always get the final word.
So we've covered a lot, right? We've seen how federal laws can create chaos at the state level, how the digital economy is the new tax frontier, and how these courtroom battles can turn on the tiniest details. So what's the big takeaway here? Let's zoom out and see what this all adds up to.
It really boils down to three big trends. First, states are always going to be in reaction mode. As long as Washington keeps changing the rules, states will have to respond, and they'll do it in ways that protect their own budgets. Second, this hunt for digital tax dollars, it's only going to get more intense. And third, in this kind of environment, the fine print is absolutely everything. As we just saw, the exact wording in a contract can be the difference between winning and losing a major tax case.
And really, when you step back from all of this, all these changes are pushing us toward a really fundamental question. What does it even mean to do business in a state anymore, when a business can exist everywhere and nowhere at the exact same time? The states are trying to draw the lines, but the only thing that's certain is that things are going to get even more complicated. You have to wonder, at what point does this crazy quilt of state rules actually start to slow down the whole national economy?